Hello, everyone. What a great way to cap off the year. Adam Button is joining me from FX_Button and ForexLive. You can see the sign behind his head. Adam, I appreciate you being here during this holiday period, and what a great way to wrap up the year with someone who's, made some great calls during the year. Long energy, a lot of great macro calls, and appreciate you joining us today. I'd like to start with the elephant in the room. Okay, the thing that's different going into 2022 than 2021 is we were still, QE. There's still plenty of bond buying, and now we have double taper going by the Fed. I look at this as the TLT, Adam, and all we did was rally back to resistance, and they look kind of negative to me, which can imply growth coming and rates and yields going up because of growth. What's your view on, the Fed? Are they going to be able to complete their mission?
Yeah, I mean, right now it's hard to have faith in the Fed, right? They've damaged their credibility, and I think that's this is a tough thing to square going forward when they say, well, it's transitory, and then they said it's not, and then they start to look like they're hitting the panic button. And right now they're in that kind of mode where they're saying, oh no, the inflation is got us scared. Even then Omicron comes around and they're like, well, maybe that's inflationary. And so they're starting to open every door, and behind it, they see more inflation. And, that might mean hike.
That's what the dot plots are saying.
If I were to kind of to sketch it out, and this inflationary scare were to run, and I think there's some reasons it could, also some reasons that it probably shouldn't. But if it were to run, and I think the peak of whatever inflationary fear would be, like a 50 basis point hike, because the economy just can't tolerate higher rates. And I think that the bond market, the absolute yields, I think, are what tells the story when you have 30s at 194 today, 10s at 153.
Or the 10s.
That's not a lot of inflation being priced in 10 years out. Now the Fed has got its thumb on the scale. And so you could say, that's that, but I don't think hikes in and of themselves are such a problem for anything. It's really the terminal rate that matters. So, if we hike up to 2% tomorrow, obviously it's a problem. But if the top of the cycle is 2% Fed funds or lower, I just don't see that as being a problem for any of the big trends that I believe in, like, whatever, growth, housing, a positive macro environment. So
you see 22 same as it ever was, like 2021, even with the Fed in the picture.
Yeah, I really do. I mean, you're gonna have a lot of inventory building this year. I think U.S. housing, we've snapped. It's going to run for years. We snapped out of that sort of post-financial crisis, housing crisis theme, and those scars are healed now. And I just think there's a lot of demand, pent-up demand. The high savings rate, I mean, it is shockingly high in the U.S. most everywhere. Governments are willing to spend, so you can't have a recession, where they'll just spend another billion if they need to. So, the inflation is the real problem, the potential problem. I don't think we're there yet. Now, when would you know
when the Fed, or if the Fed is making a policy error? Where would it show up first? In risk, in the equity market, in the bond market, say high yield or corporate debt? Where will you be looking for? Perhaps that the Fed again panicked and they're wrong again, and they're going to have to reverse.
Yeah, I mean, the only thing I worry about in markets is the bond bubble. I mean, it's the biggest bubble in history. That's totally unsustainable to have yields this low for any length of time, and that will pop one day. I don't think it's going to be this year, and I don't think this inflationary scare does it. But if the Fed were to go and start to really hit the panic button, hike 50, something like that, and bonds were to blow up, yields were to shoot higher with that, and the bond market start to panic about inflation, you've got to sell down risk.
That's a
If
pretty
rate-
ugly chart I'm showing right here, Adam. If you could see the monthly bond chart, what a negative month December was. And we're closing on a pretty poor note too. So that's not a market I would buy. I would say that what we've had is a big break from the panic of COVID. After that was over, yields rose and yields tried to come down again. And it was a pretty weak retracement. And back under that 140 level, God, there's a lot of air underneath that market.
I mean, you should really, 30 years should be at 5%. I mean, in any sort of really long-term healthy environment, they got to be at least 5%. We're at 1.9.
Okay.
And so to get there, you got to reprice a lot of things. I mean, I'm bullish on housing,
everything, everything, right?
Any kind of growth stock, tech stock, any levered company at all. And there's a lot of them. Levered
even commodities, Adam, yields are competition at times for commodities, and yields could slow down this growth that you're talking about. Don't you think?
This is all credit.
Yeah.
So that is certainly
so here's the boogeyman.
But I don't know. Like you could argue that for the last 10 years, you'd argue for 30 years in Japan. So I'm not going to trade that until, like I said, there is a real panic. But
all right. So here's another difference, big difference. Last year, the whole world was bearish a dollar coming into 2021 down here.
Yeah.
And we've had, and you made some bullish dollar calls. I remember being on with you when we broke.
Well, it was such a consensus call last year.
Yeah. Isn't it the opposite now?
Well, you got to do whatever the opposite. I'm not sure there's a real, I'm trying to think of some, I haven't read that many year-end notes because they're kind of going out of style now, but I'm not sure I see a strong consensus around a lot of trades heading in. I mean, there's sort of this inflationary whipsaw and there's but even if that's the trade, what's the consensus on what to buy? But that if I'm missing something and there is a big consensus out there, just go against it because that's probably the best trade.
All right. Well, you're one of the better fundamentalists that I know. And say, for example, even though there could be, we could get up to 98 here in the Dixie. Yeah. Can you tell me fundamentally what would be a bear case for the dollar, just in case this rally that we've had in the last year and a half is just a corrective rally from the peak we had in early 2020? And, is it going to be interest rate differentials? What could cause a bear market in the dollar, Adam?
Yeah, I worry about it. Yesterday, trade balance numbers from the U.S. came out. It was like $100 billion, almost like a record 1 month trade deficit, right? And so then, you have to have the money coming in to offset that. And the money comes in via the capital account, the U.S. U.S. equities have been an incredible thing to invest in, and treasuries are what they are. They're the global safe haven. And in a way, when you have bad times, the treasury flows out, they match the equity flows and things are good. I think the dollar to a large extent has been held up by the tech trade. All that money flowing into FANG, and it's been a sensational trade. Don't get me wrong, but
they've turned into a safe haven trade.
They're everything, right? They're the all-weather trade. They're the super secular trade. Whatever, the numbers speak for themselves. So, and they're holding up the whole stock market. It's put the U.S. market at like a 22 PE compared to most of the rest of the world, like 12, 14. And whatever, why shouldn't Apple have a high PE and Microsoft, and why shouldn't they be half the index? But at the same time, if those were to correct, I think that to me is my main bear case for the US. It just can't be in like a big time growth scare, or you get those capital flows in the treasury. But if you were just to have a kind of like a US slowdown with a tech slump, and not that bad of growth coming out in the rest of the world, then you kind of have a case. That's that sort of dollar smile where you're in the kind of the not too good, not too bad,
right,
sort of scenario with tech. If it's that sort of the value trade comes back and tech goes out, you probably only need tech to just be flat for a year because you have that headwind with this gigantic growing trade deficit in the US. Mm-hmm. And
All
I
right, well,
think that would probably be my bear. And it's almost like, I wouldn't even say that's that far off from my base case. But how can you really make a base case around where Apple ends up, or where Microsoft or Amazon or any of those?
how can Amazon be a safe haven stock that's gone up almost 10 times in the last 7 years? I mean, that wasn't what I was taught about safe haven assets. Surely wouldn't be something that had this type of price expansion.
We got to talk about one of the all-time goofy macro calls. Kathy Wood last night on Twitter comes out, and I don't know if you've seen it, but it's utterly bizarre. And she takes like trade balance inventories, UMISH sentiment, and this 1 month of the savings rate drawing down, extrapolates it over 12 months, says it will mean there's a growth scare coming, but the winner in the growth scare will be her stocks, which are like 100 times sales. Somehow there's going to be a growth scare, and high multiple companies she thinks are going to be the winner in it. Yeah. And it's one of the most bizarre macro tweets I've ever seen.
Doesn't higher yields mean compressed PEs and a reversion to the mean? And so, I just wanted to, take a look at the FANGs, and you were talking about the FANGs. A lot of people starting to turn negative Amazon. It's going to be interesting if NASDAQ makes a new high to see what Amazon does. So,
and on the dollar call too, it could be regulation. Yeah. I mean, it could be as simple as regulation, and maybe some is doing. I'm not necessarily Amazon, but Facebook or whoever else. I mean, I'm not that up to date on the tech regulatory framework, but there's certainly a lot of rumblings about it.
Okay. And, I know that you've been a big fan of oil. So, I want to talk about the macro in oil. Yeah. So we did have this nice correction since the last time you and I talked. And, now there's a narrative that, that the oil cycle may have peaked. Just a few people saying this, and this could be a failing rally to sell. Others saying that we weren't going to see 100 this year, but we certainly could see in the spring 90. What part of the line?
Well, at first I want to ask you, what voice do you hear more? Like I'm in this echo chamber in the oil market with a lot of bulls. You know how you can get into like echo chambers wherever you are, you feel like you're in groupthink. What sort of side are you hearing more from? Like, what's the sort of this, whatever. And I don't know what echo chamber. We're all in an echo chamber, but where you're hearing?
I would say that technicians are more on the bearish side after this break, right, but longer term bullish, but they don't feel the correction has taken place. And the fundamental people are all still in your echo chamber.
Well, okay. All right. I hate to hear that. I like to hear that everybody's bearish oil.
I mean, it's some I've seen on CNBC, it's some of people's top trades for 2022.
I mean, that was my top trade for 2020. And it was, that's what you want to see it for next year. I'm still bullish, but I listen, there's one big macro risk. And so Omicron's out there, right? It's going to be horrible. Doesn't matter. It does not matter, because in 3 months or 6 months, it's going to rip through and it might be miserable. But I think the market's just saying, listen, by June, this thing's going to be over. And whether that's misplaced optimism and another variant comes around or whatever, but that's what the market's saying. And I want to get behind it.
Omicron is going to last until June?
No, I mean at most, like at most.
Oh, okay.
Probably March, but at worst, whatever. June. I hope till March. Except one big caveat, though. China.
Yeah.
And that's what's got me worried about oil.
Okay. China, well, Adam, I just have to stop you here, because that was one of my narratives, was that China dragged us out of the Great Recession, and with their de-risking and why are they shutting down with Omicron? And could they drag us into a recession? China.
They certainly could. And they have to get from COVID zero to letting COVID run through like everyone else, because that's the other side of this, right? If the rest of the world has endemic coronavirus, which seems almost
to be
inevitable, how is China ever going to interact in the global economy with zero COVID? And congratulations to, I didn't think they could pull this off with Delta as long as they have, but Omicron is a different beast. We all see now how transmissible it is. And right now, if you see
the RN number, people have commented that everyone's going to get it.
Well, that's right. And I mean, that seems very reasonable. It's not everybody, but close. And China, they're shutting down a city right now of 13 million people. Like the hardest lockdown you can imagine. You can't leave the house. It used to be last week, one person could leave every 2 days to get groceries. Now nobody can leave at all. And they're going to deliver the groceries. I guess the military is coming in to help. This is a city of 13 million. And just today, Micron came out, who builds chips there, it's a chip maker, and said this is going to cause problems. I guess they have a factory there. And, that's one city of 13 million, and China is just doubling down on this zero COVID policy. And I think they have to through the Olympics, right? At least.
Great point. But
how bad is it going to be? Because it's going to keep pinging China, and is it going to be lockdown after lockdown? It's impossible to stop. And it could really just put gasoline on the bonfire of supply chain problems and hit global growth. China's massive user of oil. I mean, nobody in Xi'an's driving right now. So, I really have a laser focus right now on China and how this is going to develop there, because if we see widespread lockdowns in China, I just don't see how this can work.
That's the end of the growth narrative, at least for a while.
Yeah, well, they're going to ease, so, and I see the market is a little bit excited about that. We've seen a bit of easing, and they're signaling more easing. I think the headline to buy, if I could find one headline to buy in 2022, it will be when China says, we're going to let Omicron run. Like, we're going to open, we're going to manage this. Our vaccines are good enough, and this disease is mild enough that we're just going to let it run. And I think that, China reopening. Now, how much pain we have to get there, and how fast, and the wisdom of Chinese leaders to maybe give up this fight that they're going to lose, is a real open question.
Does the yuan matter in this scenario?
I mean, I could weaken off on this. I really don't think the yuan matters at all in the big, that range, whether it costs 5%.
Say what you mean, bro.
5% or 10% more to get things from China. I don't know if it's that much of an issue. I mean, they adjust their prices on that end. I mean, this isn't the Turkish lira where it's moving that much. So I don't factor it that much. Not that China, if it were to move too quickly, would cause issues. And it'll be interesting to see if they do have a real growth scare around this. Because
they'll devalue, won't they?
They've got a lot of pride in this COVID zero, and that kind of pride be a real
And that's a
problem.
great point about the Olympics. They're not going to not clamp down until after February.
And the Olympics will probably cause a lot more outbreaks, right?
Yeah.
And right now we've got Lunar New Year coming up.
I had to withdraw from the discus because of my fear of Omicron. I was going to throw the discus.
The discus.
The USA.
Is that your event?
Yeah, that and the shot put. So, strength, like an Olympian. There's been a real big break in that gas. And I have to ask you here, Adam, I mean,
which one you got there?
Putin gonna, when Putin invades,
right?
Okay, and I heard that he'll have enough troops in line by the end of January. And he's talking, him and Joe are talking today. What do you think they're saying to each other right now?
What chart is that?
That's priced gas.
Is that priced in rupee? What is that price?
I don't know.
This is an INR.
Continuous contract.
Okay. Anyway, it looks like a lot of the natural gas contracts.
Yeah.
Russia, Ukraine. Okay, let's say Russia invades Ukraine. Okay, that's a little more familiar.
All right.
Let's say Russia invades Ukraine. I mean, is it really that tradable? Listen, I don't want to see it happen. America already said they're not sending troops, so that's kind of waved the white flag already. Right. Nobody's going to fight Russia, except the Ukrainians, and they have the 6th biggest army in Europe, so they could, it could be a pretty good fight for a little bit. I guess.
What about natural gas supplies to Europe in a scenario like that? They're already getting creamed.
I can't believe what Germany's doing. Let's sanction this pipeline already. Is crazy. I mean,
They need it.
now would be the time if you're Russia to do it, right? Because they need the gas. I mean, they'd go stratospheric, but they've already gone stratospheric.
That's what I mean.
I don't understand how anyone's surviving in Europe. They're closing. What did they close today? An aluminum smelter in Spain, the second biggest one in Europe. And I think the biggest one in Europe is already closing. So where are they going to get aluminum for? Anyone who needs it. It's going to be the same in copper, anything you need to smelt or anything you need to build that's high energy. These inventories aren't going to get rebuilt in the summer. So we're just going to tolerate gas at these prices in Europe for like the foreseeable future. I just don't see a way out of this. And if it's already a mess. And so if Russia were to go to war, it'd be crippling for Europe. Crippling.
Okay. So that sure doesn't sound too bullish for the euro. Are there some people, it's hard, tankers are expensive, but it looks like you could buy US natural gas here for $3.70 and just take a boat ride to Europe and make what, $15 a BTU?
50, 60. 60.
So
that's the equivalent. There are a few
people doing that?
It's down a bit there now, I guess, but it would have been the equivalent of 60 last week there for it's about so you cut it off, but triple, whatever it is. Oh, it's a sensationally profitable LNG. And credit, the US, Qatar, Australia for building LNG plants. They're going to be drilling for a lot of gas, but I mean, it's still not that. It's so insane. All the gas is it's hard to liquefy and move. And you got to build a $10 billion plant, $30 billion a lot of times. I'll tell you that this is what annoys me. I'll tell you in Canada. So in the Obama era and before that, forever, America had banned exports of natural gas, hydrocarbons, really, the raw material. And Canada hadn't. And Canada has as much natural gas as the US. And so Canada started to build LNG plants, or started to get this idea, we'll build LNG on the West Coast because Asia needs it. And Canada's closer to Asia, especially than the Texas Gulf Coast, because you got to go through the Panama Canal.
Right.
And, there's like a dozen plants ready to go. Permitting disaster. I mean, regulatory disaster. Nothing gets built there, Dale. 5 years later, America says, you know what, this is crazy. We got all this gas. Everybody wants it. So they start They say, listen, let's change the laws. Within 7 or 8 years now, they've built insane amounts of capacity to export liquefied natural gas. Canada is still at the starting line. So, America, it's tough to be bearish on America when they can start with a 5-year handicap on something like that and build.
That's pretty amazing.
And they'll build more. Eventually other people keep up. But Canada is pretty wealthy in a lot of these resources, but it's not. They're useless if you can't get them to market.
Okay, all right. So looking at, I know we didn't cover it, but let's do it. January. Any things that you're seeing for seasonality that you want to?
It's the golden month. It is the golden month. One of the strongest seasonals out there is gold in January, and a lot of that to backtrack a little bit is the Lunar New Year buying, China, India. Is Omicron going to put a damper on that? I don't know. Gold has held up pretty well. The sentiment is just awful in gold, but it's held up pretty well. And so. I don't really know what the narrative is in gold anymore. If it's inflation, if it's deflation, if it's competing with bonds, if it's a risk asset, if it's a risk off asset, I don't know. It doesn't really track anything anymore. Real yields. So
the dollar.
Yeah. I mean, currency debasement should be the trade, right?
That should be it, right?
That should be it, but it hasn't worked.
Yeah, well, you haven't had currency debasement in the dollar for over a year, so
sure.
So maybe if that flips, that's the jet fuel for it. A lot of people are discouraged with gold and silver, but it really hasn't been because of price damage. It's just been because it hasn't done anything, and people are so used to, cryptos going up 1,000%.
Everything.
That something that just moves sideways is terrible. Let alone if it declined, it would really be a disaster.
And that kind of brings me back to the point about tech. Like if that Nasdaq is just flat on a year, I mean, God forbid. So other seasonals, the yen, it's actually not, the risk trade is kind of funny, but the very strong yen, weak euro. So maybe that's a spot to look at. The FTSE 100 tends to do really underperform other equity indexes.
How about euro pound? We've been going down for a long time, but I did want, euro pound, just a quick comment, because this is going to be the $1 million question or $1 billion question,
Bitcoin.
and it's Bitcoin, buddy. So,
I
crypto's had a phenomenal year. Tom Brady trades crypto now, shows them on TV making a trade, and Matt Damon is saying, only the courageous make it, and and now even Melania is doing NFTs and crypto. Are we looking at a head and shoulders top in Bitcoin with, say, a neckline around 42,000?
Sentiment is pretty, it's interesting in crypto, right? Because I think the most interesting thing in crypto is sort of the fight between Bitcoin, maybe Ethereum. And the new stuff. No, and kind of the upstarts. I think by now we know the flaws in it. Like these gas fees are insane. You can't trade it without paying all kinds of money. Bitcoin is inefficient, slow, the energy. So that's sort of out there. And I would have thought around this time last year, around January, February, a lot of people were pointing this out, that might have sort of pricked, been the pinprick. And you see some other stuff, like other cryptos, Solana, and some solutions to some of these problems.
Yeah.
But that war is kind of ongoing. And maybe you need a washout to really reset the table on all that. I see what you're saying. And it's been technically has been the way to trade crypto, especially Bitcoin.
Yeah, there's very reflexive. And this looks like, that we could end up with some type of, neckline there and have some type of, pretty serious bear market.
And I think that fits in with a lot of what I'm saying. If China has problems with Omicron, the Fed sort of makes this policy mistake, and they think China shutting down will be inflationary now. And I see the argument, the supply chains and whatnot, but you're not going to hike your way out of a supply chain problems.
Yeah.
So
this measures 20 grand if we break down.
I think we had that. Like, what was the breakdown last year? It's kind of didn't quite get to where it should. 20 grand in Bitcoin. That's not even that big a move, right? It could happen. God forbid that $30,000 level go. Yeah. Now that's a lot of pain. I hate to see it. I think that would tell, tech too, though. The pieces kind of fit if China has a slowdown. And then I didn't wrap up on oil. If starting on the seasonals around February to June are very strong for oil, and we're not drilling for enough of it. So, I'm really I'm long oil, but very cautiously till I get some clarity on China. I like the hard materials, building materials, steel, lumber. Very bullish on steel. I think we've talked about steel before.
Yeah.
Dale.
You have a view on uranium? I told you we talk about everything.
Makes a lot of sense. Boy, God, I was long uranium like 10 years ago in the same trade, and it finally came out. I didn't make any money on it this time, but it just makes so much sense. But if you're waiting for politicians to do the right thing and invest in the right thing, you might be waiting a long time.
Your hair will be silver like mine.
It might be. And I believe, if I were to say one big tech trade, environmental trade in 2021 that nobody is talking about is carbon capture. There are not a lot of ways to invest in it right now, but the government money is coming and industry is coming for it. And I'm hopeful that they'll be able to bury a lot of carbon problems 3 kilometers underground.
It'll give us something else to trade too, right? The credits.
The credits, but the carbon capture technology, it's 2022, I believe, is going to be the year of that trade.
Well, let's wrap it on that note that I think we covered every topic, a lot of different instruments. I want to wish you and your family, Adam, and all your associates at ForexLive a Happy New Year. And I appreciate that you come here almost once a month to share your views with us and edify the TradeGate Hub community. Thank you very much, Adam.
Happy New Year to you and everyone there as well. So yeah, thanks so much, Dale.
And I'm always rooting for you. Let's get them in 2022 as well, bro.
Yeah, everybody is
Okay.
clear the deck.
All right. Thank you, Adam.
Take care.
All right, everyone, Adam Button, hope you enjoyed it. That's a wrap. Happy New Year to everybody. And I'll see you next week. Remember, don't just count your pips, count your blessings. Adios.